It is a brand new month, August the 1st, 2021. This month we are going to do a 30-day challenge where we will be posting videos every single day, which is your premium robots, indicators and strategies from the best out there. Welcome to another month. My name is Montivino Valentine. I am the co-founder of the Pride FX movement, and here at Pride FX we do strive on giving free indicators, robots and strategies that are at a premium price. We know sometimes it is not possible to buy all these indicators, so we help you cover that so that you can continuously make profits with all these strategies that are being sold at a premium price. So today I want to say thank you for the movement, for all the people that have subscribed, for all the people that are in my Telegram group, and this is a gift from me to you. It's called the Boom and Crash 500 and 1000 cheat codes system. Okay, so we're going to dive into it straight away, but before that I'd like to ask you to subscribe, hit the like button as well as the notification bell so that you can receive future videos here at Pride FX. So welcome to you if you are brand new, and welcome to the old subscribers that are on our channel. So today we are looking at the cheat codes of Boom and Crash, and so let's dive straight into it. So the first thing I want to speak about is the series of this, and most of the times people are hyped up about the spikes that happens in this series, right, to catch these spikes. But most of the times while I was doing my theories and analysis and trying to figure this out, I found that these spikes happens at random times. We've tried indicators, we have tried different robots, but most of them failed to do what we have found, right? And that is to be more profitable with the strategies that you guys are obtaining, as well as the robots. And so if we look at indicators, sometimes they say if it's at an overbought level, you can take a sell and the spike would occur. On this journey of us trying to figure it out, we figured out that most of the times these spikes just happens at a random place. And so what I want to speak about is the broker's mission on this is just to keep you emotional, because most of you are afraid of these spikes. Some of you are trying to catch these spikes, and some of you are just trying to make money from the ticks, right? And so I've seen a lot of people make the same mistake, which is trying to figure this out by using indicators and robots. Remember, these robots, when they find the conditions, they're going to give you signals. These robots as well, when they automated to trade this and just take profit, sometimes when the spikes occur, they don't even know what just happened. And remember, with pending orders as well on this, you have slippage. So if I had to put a pending order over there, and I'm saying when the spike occurs that it should take a sell and then exit there, now most of the times your sell would be below the spike. So wherever the spike happened, you will have that as your entry point, and then we can see over there your losses after that. Okay, so yes, so that was the main problem of me looking at robots as well as indicators, because most of them was not giving me the information I really needed. So what I came up with was looking at different theories and indicators, and so I left the indicators and theories and started looking at this as market noise. As most of you know, most professional traders as well as the 1% tend to tell you that on the 1 minute, the 5 minute and the 15 minute, it's a lot of market noise. And why they say that is because there is no trend involved, there is no superior notification of where is price going, right? And that's the signal in your brain, where is price trying to go, right? So I've seen a lot of YouTubers as well as Forex mentors explain it this way, and they speak a lot about indicators. So I left that and I said, okay, let me focus on something else. And the theory came behind the clue that they gave me. So the clue up here reads, on average, one drop occurs in the price series every 500 ticks. So we tried that for a few months and figured out that's not working, because after 500 ticks the price was still moving up and the spike never occurred. So in that theory we also figured out that, look, the spikes will just happen randomly, and sometimes people do catch these spikes, and other times the spikes just never come. Okay, so what I've done is I went to go and look at theory, and then I found out that the best source that we found was looking at Bailey's philosophy on NASDAQ. And so we brought that philosophy to life here at Boom and Crash. And so the thing that they gave us was the information on when these drops would happen in Crash, and in Boom when the spikes on the upside would happen, right? So if you're looking at Crash, the spikes would go down, and if you are looking at Boom, the spikes goes up. So it's very simple to understand it in that way. So let's get into the strategy. I just wanted to let you know that if you are trying to use indicators as well as robots, or the ones that they do give you, which is your RSIs and your windows, it normally doesn't work with this, okay? Because remember, this is totally different to Forex, it's totally different to CFDs, it's totally different to your volatilities, okay? Because of the spiking series as well as the ticks that they do count. So what I found out is that brokers accumulate all these numbers to a certain price, and I'm going to show you how I know this. Okay, so let me just zoom out a bit. And so what you want to do, guys, is first of all you need to plot these numbers. Okay, so they already gave us a clue. On what to do, and the clue is that after every 500 ticks they're going to allow these spikes to happen, right? But now what they are doing is actually accumulating that amount to a certain price, like I said. Okay, so what we have done is we have taken this information and just gave it a whole number. So if we're looking at this, let's start by the starting point. So I'm going to plot from the top to the bottom to make it much more easier. And so we're starting at 11,170. Okay, so what you're going to do is, what you guys are going to do is start from 11,000, right? So we're going to say 11,000 because the highest number there is 11,170. So we're not going to focus on that. So we're saying 11,000. So we start at 11,000 and we're going to work our way down. Okay, so what you want to do is use the value 500 over and over. Okay, so 11,000 minus 500 is 10,500, right? Which is simple. So you're going to go back and you're just going to click over here and go to properties, or if you are on your cell phone, just hold it in, it will bring up the same options, and then you go to parameters and just change the value over there. Okay, just to get the accuracy of what we're trying to do. So it's going to be 10,500, and then click OK. And so once that is done, we're going to plot another one. So the next one is 10,000, right? So don't leave as yet, because there's a lot of information that I need to explain to you as well. So here we're going to put 10,000. So every time if you are moving up, you're going to add 500, and if you are moving down, you're going to subtract 500 from this. So you're going to say 10,000, and then you go back again and you're going to do the same thing again, right? So we're going to work until we get to the last point of this. So here we're going to say properties, and the same thing would apply over here. So this is actually Crash 500, so you're going to do the same thing for Boom 500. And if it's 1000, you're going to do it the same way for Crash 1000. Okay, so we're going to get into that now. So let's just finish this part first. So 9,500, and so we're going to take this away, and that's going to be there, right? And so now what we're going to look for is 9,000. So we do the same thing again. So we go over there, put it over there. And so basically we just want to work our way down to the last one. Okay, so this is going to be 9,000. Okay, so not to waste your time, I'm going to plot them quickly so that we can dive into the information of why I'm doing this. Alright, so I'm done plotting my lines, and so let me explain this to you. So after every 500 points or 500 ticks, you're going to get a move of multiple spikes, or you're going to get a move of multiple ticks, right, to that side. So here we can see an example where price came there, and obviously there was drawdown over there, but we can see when price went up, we can see that you could have had your clean exit that side, right? And you could have entered for a sell once price pierced through with the first spike. You had a few attempts at breaking the level, but you can see that what happens at this is that it went through two of these levels, right? So you had over I would say 10,000. You could have made over 10,000 pips from this move. Here we had another buy one, so you could have had that buy to the upside. So you guys can see how much profit you can make, okay, just from entering and closing at this price points. Okay, why is a higher time frame so important? Because if you are looking at all those spikes over there, you're going to miss the most lucrative part of the broker. So the broker wants you to enter on those spikes or on those ticks on there and exit cleanly, because I know a lot of people, when they are looking at it, they're saying that you should actually just take entries over here, take your entries if you get a buy signal, and exit after 4 candles, and then price might spike, right? Which is not going to make you that much profit. So imagine entering over here, waiting for that exit, and then you have multiple spikes to the downside. So that's the problem with using it on the 1 minute time frame. So you go on the 4 hour, make sure that you plot every 500. Okay, so let me speak a bit about exits. So if you want to exit, okay, make sure that you are doing this. So our exits is at every 250 price. Okay, so for that you're going to need to bring up the line, obviously, drag it to that point, go to properties, and then what you want to do in properties is just change it to 250, just like this, 250, and then take away the decimals over here. Make sure that you're always taking those decimals away. So you have your 250 over there, and so now we're going to have to do this again. Let's just plot these lines quickly. So over here we have 750, so we're just going to put 750, right? 750. And so once you have plotted them all, these would be your exit areas, right? So let me show you exactly what I mean. So if you took a buy here, remember this is to tick because it's on crash, so we are expecting to exit over there. When you exit over there, price, yes, it did go and touch over there, but to be secure, you're at least making 2,500 pips of this move. So you exit over there, price went there, you could have taken a sell and then close again in profit, and then look what happens. So if you were expecting price to go there, what actually happened? Price decided to go up, right? And when price got here, you could have taken a buy again if the candle has pierced through. So make sure that you are also checking what is the candle doing. Okay, so if the candle pierces through like that over there, you could have taken that trade, right? So here we had the candlestick piercing through over there, and we can see that it hit our take profit and came back down. So when this happens, you could have taken another buy and close over there, and then price came to play a bit, it went up to that side, and if you taken a sell, you can see that your take profit was hit, it went back there, so you could have taken another sell, you came to hit your take profit, it went up again, so you could have taken another sell, came to hit your take profit, went up one more time, you could have closed. Now this one, don't take it, and then as you can see, it passes through again, does a retest, take a sell, hits your take profit, hits, comes, takes a sell, hits your take profit, goes to the downside, you take a buy, you hit your take profit again. So just make sure that you're always looking at what the candlesticks are doing. So here is another example. Let me just show you this example here as well. So this would be 9,750. So 9,750. Let me show you exactly what happened at 9,750. So 9,750, and we take away the zeros. Don't forget to take away those zeros. And so here you had your exits, right? You can see, boom, exit. Here you had another one coming to this side. There's your exit. Here you have another one, your exit. Even these ones are in take profit. So all these levels will definitely hit your take profit if you do it exactly the way I'm saying, and practice a lot of the times, because this strategy is very powerful. Okay, so here you have that, take that out. So here we're looking at 9,250. Remember that we are incrementing by 250 for our exits, and for our entries we are saying 500. Okay, so here you had another one. Look, it pierced through, it hits your take profit, it goes up. You had a little bit of drawdown, so you could have entered there, and then price went up. If you just continued holding for a little bit, you can see it came to hit your take profit again. Here we have a few. Here's another one. Here's a buy that went to go and touch there. Here's a sell that went to go and touch there. Another buy, and two buys that actually hit both take profits. Here we have another sell that hits your take profit, and then it goes up again. And if you take this buy, you can see that it hits your take profit. Here we had the piercing of that level again, so you could have taken your entry over there, and then your sell hits your take profit. So it's always going to work. It's always going to work. Don't focus on smaller time frames. Don't focus on indicators. Don't worry about the spikes. Don't worry about ticks. Make sure that you are implementing this in your strategy, right? It's a very good strategy. So I done the same for the 1000, and the same thing applies to 1000. Just over here is that the spikes are stretched out much further. That's why our end, it looks like our things are much far apart, but it's just that it is stretched out a little bit further. So the green is actually my indication of entries, right? This green line over here is actually my entries. It's actually my entries. Let me show you what I'm talking about. So whenever you're plotting this 500, make sure that you have two different colors, right? So this green is for my entries, right? And this red is for my exits. So I'm saying when price reaches this area, I'm going to take my profit. Okay, this one's would have also been in take profit if I plotted those levels. So let's look at this on the 1000. So you're incrementing the value by 500, and why we're doing that? Because the exits are much far away. Okay, because if we're saying 1000 over here, and so the next 1000 line would have been over there. So I just incremented this so that you can have multiple entries. Okay, so the same applies over here. So the indication that they're giving us, or the thing that they are giving us to say, look for this, is on average one spike occurs in the price series every 1000 ticks, right? So I just used the value of 1000, but then I made that half because I want to continue entering into this market. If we're looking at the 1000 level, it's going to be much further, and your exits on 500 would also be much further. So if you are growing a small account, it would be better for you to use 500 for now. Okay, so let's look at this. So here we have our level. There's our entry point. We can see it hits our take profit. Here we have another entry after the candle has pierced. We can see that the spike hits our take profit. It even went higher, but I wouldn't suggest for you to continuously hold, because sometimes if you are going to take those sell trades, you might have a spike that comes up again, and then you could have had your take profit and then enter again for that. Okay, so that's the reason why we are using these as our exits, so that we can use the same amount of money to continue to make money. Okay, so here we have that it hits our take profit. Here we have another spike and it pierces through, so we had our take profit hit over there. Now look at this, what I'm saying. So if it came back, you wouldn't have made that amount of profit, because this could have went either way, right? So here we didn't have our sell because it never touched our entry level, right? So here we have a sell trade over there, 1 2, so you could have entered there or over there. So you had two opportunities to enter, and you can see your exit point is exactly there. It hits your take profit, and then over here we wouldn't have entered because it's too far from the line. Remember that price could have still continued to this line, so be careful of that as well. But if you want to take the risk, I would say the best thing for you to do all the time before just taking that is making sure that there is a support level running across. Okay, So that's for more advanced training, but for now, just focus on this. It's a very good strategy. So once you get over here again, you can see that, okay, there was if you are going to use the support and resistance levels, but don't use that for now. Just focus on this. So there you could have entered if you wanted to, but you don't have to, because you are waiting for that snipers, right? So here we had that move, and obviously it didn't work out as planned, but here we had that pierce again, and we can see that price went up to the upside, even closed your take profit, and then went to go and touch. So you had a sell signal there, hits your take profit, goes up again, and then comes down, hits your take profit. There's another take profit. Here's another take profit. You can see that all the time you're going to hit your take profits if you just focus on this, right? So here you had another pierce, hits your take profit, another one, retest, boom, hits your take profit. Went to go and touch that side, you could have taken that trade and move up to your take profit, and then you have another pierce over there, hits your take profit. Okay, so the last thing for me to speak about is that this strategy is 100% going to give you profit all the time, and it is 100% of the times profitable. It's just your emotions needs to be in balance, right? Because if something like this occurs, you're going to exit and you're going to take that buy trade. So why you need to look also at the behavior of these candlesticks. So if we zoom in to look at these candlesticks, we can see that over here, right over here, you had an entry, right? So you can see that the candlestick is not also below the level that we have set for it to respect, right? So you can see that over there it went up, so you could have taken that buy trade and hold it there. Now what does this tell us? The price is not ready to break our exit point, right? But it gave you the exit, so you can set your take profits there. And then price went down again and came back up, right? So here we had the pierce. So always make sure of this, that the pierce is followed with another momentum candle, right? If you are breaking a level on these 500 levels, make sure that the momentum of that candlestick is followed by another buy candle. But if not, you could have waited and seen that after that candle it was a sell candle, and then you had another sell candle follow, right? So once that happens, you could have taken the sell and hit your take profit, right? And then it continues to go down and continues to go down and hits that level again, right? And so like I said to you, look at what follows all the time. So here we had a sell and a buy candle, so it's not showing us the implementation of us taking a sell as yet. But if you did take a sell, always make sure that you are not exiting too quickly, because look at this, you had the sell come back in, and so there's a confirmation of that, and it's followed by another sell. So here we had a buy candle, we had a retest candle followed by a breakout. So a breakout and then a sell candle again. So you guys can see that they are playing with who? They're playing with your emotions, because maybe there was a few other traders coming in over here and trying to take those trades, right? So be careful of that happening. So if you are seeing that this is happening, just know that the brokers are playing around with people to take exits or to leave the market and then move in that direction. The price is there, it's already telling you where the market is going, right? So here you have a sell, so you're still continuously holding, and then over there we can see after that the momentum has changed. Why? Because a lot of people have left the market, so now they can make those moves to keep some of the people in, and the rest is left. Here we had that, and then we can see over there we had another take profit level being touched. On this side again we can see the piercing, so you had your buy trade over there. And always look out for these candles. Whenever you see a retest like this, take a buy and hold it to your take profit level. Make sure that you are focusing on this. It is 100%, it's going to give you profit 100%. I value the strategy, and it is in my top 5, okay, one of the best. And so now you guys also have it. Make sure that you are also practicing. That's it from me, Montivino Valentine from Pride FX.